Thank you.
Well, the company really coming under pressure in the first half. We've seen a 51% fallback in first half profit. Your major pressure points as an IT company operating in South Africa right now?
So Alishia, we are very much focused on the retail market, and our business broadly is categorized into a software component and a services component. We've just recently executed a disposal of our services businesses into the business connection, and in fact those businesses performed exceptionally well in the first 6 months. They were up some 75% year on year. So really we're talking about the software businesses being the area that we saw quite a bit of pressure. And on the software side, the business did bring back into the group last year in May a company called Agility Limited. It was a business that we had set up in around 2007 for the international markets. It had been relatively unsuccessful in that regard and really got to the point where we had to put it back into a South African-based focused software business. And what that has implied is bringing the business back in, which was initially set up for the UK and the US, and looking at the South African opportunity, it's carried a cost structure that's obviously way in excess of what the revenue opportunity is. So this 6-month period has seen us go through quite a significant right sizing in that business. We ran a voluntary severance program where we've removed some 48 heads of an organization of about 230, and that came at a cost of about 17 million rand to the business. And that's going to be saving us in the region of about 2 million rand per month going forward.
So it's really that streamlining of that business that has resulted in the kind of numbers we've seen today. And it's not only that Agility operation that's been unprofitable, sequential as well. So what's your strategy with those two operations? How soon could we expect to see a turnaround in the business that you're talking about?
So sequential, very different scenario. Sequential is a business we invested in also around about May last year. It's a business that offers a software as a service application to the market, specifically for warehouse management. And it's in the ramp-up phase. So it really has to accumulate a number of customers paying a monthly software service fee in order to cover its overhead structure. So it's in a very different space to the Agility business that I just spoke to. But in essence, where we see the software units overall is we see them moving towards a cash break-even position by the end of this financial year. That would be September, and then moving into some profit territory in 2012.
Of course, you touched on those discontinuing operations or discontinued operations, and one of the standout factors there is that you managed to realize margin improvements. So what do you make of that ability moving forward to realize margin improvements in the current market?
So it comes back to the fact that the business is very much a retail supplier of software and services. And so what has happened over the last 2 to 3 years with the recessionary type climate that we're moving out of is that this business was under a fair amount of pressure as retailers were within the South African market. So what we found is that as the retailers are starting to perform and trade much better, so this business is performing much better. On the services side, retailers are more open to opening up new stores, expanding their footprint, and all of that bodes well for an IT services business that's got to be involved in the rollout and then the ongoing support and maintenance of the IT infrastructure.
Of course, the results are one component of an announcement that was made today. The other is the fact that you've decided to buy back shares and delist. One's got to ask, why now?
Yeah, I mean, the business has been listed since 1998, and really it's largely as a consequence of having successfully executed the business connection transaction, because through that we've effectively stripped out about 75% of the group's assets into another listed entity. We've put those shares that we received as payment into the hands of our shareholders. So you're left with an organization, what we refer to as a residual business, which is a pure software business. In the South African market, unfortunately, it does not have any peers to benchmark against. It's always been an issue we found that the market has battled to digest. And so when you're looking at a net residual business of 400 odd million revenue, and in fact negative on the bottom line, we just believe that it's partly too costly to retain the listing of the business, but secondly, most probably prejudicial to the performance of these businesses, particularly when they're out there in bidding processes. And it's very simple for a competitor to turn around and raise certain questions around size of the business, sustainability, particularly when you're comparing it to some of the international software houses that are much bigger in size.